This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Doubling down, President Trump says that his fire and fury threats against North Korea may not have been enough, and stocks take a tumble. Macy's mauled. Sales at the department store fell for the 10th straight quarter, and investors headed for the exit. Stepping down, Wells Fargo's chairman may step down as the bank's scandals mount. So why is the stock higher over the past year? Those stories and more tonight on Nightly Business Report for Thursday, August 10th. Good evening, everyone. I'm Sue Herrera. Tyler Matheson is off this evening. It was Wall Street's biggest sell-off since May. The Dow dropped more than 200 points. The Nasdaq and the S&P 500 all fell more than 1%. The reason? Escalating rhetoric on North Korea. Today, the president said North Korea should be very, very nervous, and that his recent threat of fire and fury may not have gone far enough.
The people that were questioning that statement, was it too tough? Maybe it wasn't tough enough. They've been doing this to our country for a long time, for many years. And it's about time that somebody stuck up for the people of this country and for the people of other countries. So, if anything, maybe that statement wasn't tough enough. And we're backed by 100% by our military. We're backed by everybody. And we're backed by many other leaders.
And that pushed investors out of stocks. The Dow Jones Industrial Average tumbled 204 points, landing at 21,844, falling for the third straight session. The Nasdaq was off 135, and the S&P 500 dropped 35. Bob Pisani has more on the market's reaction to those rising tensions.
Stocks closed lower for the third straight day. This recent move down is mostly due to jitters about North Korea, and it's following a fairly classic pattern with stocks that are the market leaders, those that have gained the most, the weakest. So the so-called FANG stocks, Netflix and Amazon, Facebook, Apple, Google parent Alphabet, were down 2 to 4%. Other groups that had been strong, like biotechs and semiconductors, they dropped again today, with most of them down 2 to 6% for the week. As the markets have been a tad weaker, there's also been a flight to safety. So gold, for example, has been rallying. It's up about 2% for the week. Bonds have been up in price, lower in yield. That's usually negative for bank stocks, and right on cue, the banks are down about 4% for the week. For the moment, though, this is a pretty modest downturn. The S&P 500 is only a little more than 1% off of its historic high. It hit that on Wednesday. Panic? No, not really. Today is the first day that volumes are slightly higher than normal. But that's not surprising, given that the volatility, the intraday move in prices for these major indices were greater than they've been recently. So, for example, the Dow has been moving in a roughly 100-point range from its high to its low every day for a long time. Today, it moved in a greater than 200-point range from the close yesterday to its low this afternoon. That's enough to attract some attention. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
The president didn't just take on North Korea. He is also taking on his own party. And he had this to say when asked whether Mitch McConnell, the Senate Majority Leader, should step down.
I'll tell you what, if he doesn't get repeal and replace done, and if he doesn't get taxes done, meaning cuts and reform, and if he doesn't get a very easy one to get done, infrastructure, if he doesn't get them done, then you can ask me that question.
John Harwood is following the story for us from Washington. And John, you've been on record before on this program that a division could emerge between the president and his party, and it looks like it is starting to do that. So what could happen next, and what does that mean for tax reform and infrastructure spending and the like?
Well, it certainly has emerged, and we've seen a president who has gotten to the August break without major accomplishments, who is casting blame on leaders of his own party who've been trying to help him. Now, that is not going to help him, say, on infrastructure. That's not an easy situation at all for the president. Democrats have no incentive to help him. Republicans aren't that interested. I do think tax cuts are somewhat of a different story. Republicans have a strong survival instinct. They've got midterm elections coming up in 2018. Republican lawmakers on the Hill want to cut taxes. So does President Trump. I think despite their bickering, they're going to find a way to work together.
All right. He also talked a lot today about North Korea. He had an extensive cabinet meeting today. North Korea was one of the major topics, and some strong language coming from the president on that. Perhaps he said not strong enough. What more do we know?
Well, we know that the president has engaged in a back and forth with the North Korean leader that involved the president warning, don't threaten us. If so, you're going to be met with fire and fury. Then the North Korean leader not only issued a threat, but was very specific about it. Now President Trump is responding and saying, well, if you do anything, we're going to hit you. And U.S. officials were describing the nature of the response. If this ends up being just rhetoric between leaders who have kind of loose ways of talking, that might not be dangerous, but there's always the possibility of miscalculation, and the same things that have caused markets to go down have also rattled the national security establishment in Washington.
All right, John, thank you so much. John Harwood in Washington. A very tough day for Macy's and Kohl's shareholders. Despite exceeding earnings expectations, investors focused on their declining sales and the inability to attract new customers as more people shop online. Both stocks fell sharply. Macy's was off 10%, Kohl's down more than 5%. Courtney Reagan has more on the sales slide at two of the country's most recognizable stores.
It's another dismal day for department stores, despite both Macy's and Kohl's posting better than expected quarterly results and making no changes to full year forecasts. Investors are still pessimistic about longer term growth prospects. Sales for Macy's and Kohl's are below last year, even with online sales growing for the department stores. It's not enough to offset lower in-store traffic and sales. Plus, shoppers today have more choices than ever before.
What we see out there in the marketplace today is A, we have traffic going to a virtual place. Obviously, Amazon is one of those key aggregators. But also B, from a physical traffic perspective, we're seeing more and more consumers go to the off-mall type of formats like where you would find a Ross Stores, a TJX, an Ulta Cosmetics, if you will.
TJ Maxx, Marshalls, and outlets continue to be popular shopping destinations for consumers. To try to capture that treasure hunt at low prices, Macy's is adding its own version of an outlet called Backstage in some of its stores. But Macy's hasn't yet solved one of its biggest problems, bringing in new shoppers. In fact, the department store's foot traffic continues its downtrend, getting worse in tourist-heavy locations. Kohl's is more insulated from the mall woes since only a handful of its 1,150 stores are actually in a mall. But it too is dealing with fewer people walking through its doors, and reversing that trend remains a top priority.
The mall-based ecosystem, as you're seeing today from the department stores, numbers better than expected, but still down, is starting a gradual spiral. And I think the urgency to address whatever opportunities are left is definitely growing.
With the most important time of the year still ahead for retail, finding opportunities soon is paramount. For Nightly Business Report, I'm Courtney Reagan.
And it wasn't just Macy's and Kohl's. Dillard's had a disappointing quarter. The retailer swung to a quarterly loss after the company had to mark down quite a bit of leftover inventory, and that ate into margins. And the stock got on the down escalator, falling 15%. It was a different story, though, for Nordstrom. That retailer reported a rise in key sales metrics during the second quarter, its first advance since last year. Nordstrom's results were stronger than expected, and the company is crediting the strength of its annual anniversary sale for helping its results. It also raised the lower end of its guidance for the year, and that sent shares higher in initial after-hours trading. There are reports tonight that the chairman of Wells Fargo could step down. Non-executive chairman Steven Stenger is part of a broader shakeup at the bank that's been mired in scandal. This latest misconduct has to do with charging auto loan customers for insurance that they didn't need and didn't ask for. And this follows the fake account scandal, which first emerged last fall. But take a look at the stock price over the past year. You might think it would be lower, but it's not. It's actually higher. So when it comes to a scandal-ridden company like a Wells Fargo, does Wall Street view them differently than the public? And should you care if you own that stock? Joining us is Chris Cordero. He's here to discuss that tonight. He is Chief Investment Officer at Regent Atlantic. Nice to see you, Chris. Welcome.
Thank you.
You know, it is interesting that Wells Fargo stock is up over the past year, given some of the hurdles that company has encountered. Do you think Wall Street views companies that are mired in a scandal differently than the public?
Wall Street views profits. They're looking at profits. So are you making money by owning Wells Fargo stock? And the answer is yes. And the scandals that have broke have not really impacted profits, and that's why you see the stock prices higher.
Does it also play into the fact that it's in an area of the market, the financials and the larger financials, that has been doing quite well? Has that insulated the stock?
Well, yes, to the extent the financial sector, I think, will continue to do well. As interest rates rise, you've got lots of the financial stocks should continue to do much better. And Wells Fargo is a strong financial company. Now they have some problems here. They're tarnishing their reputation and their brand, but not enough that they're really losing a lot of customers.
Is the third strike, if there is a third strike, if something else happens at that company or is discovered at that company, would that make some heads turn on Wall Street or not?
It could potentially. You know, what would make heads turn is if larger investors in the stock, larger owners of the stock, decide that their ethical behavior is not for them, and they start pulling out and selling the stock.
For instance, the pension funds, the institutional investors.
Exactly. If you got pensions and endowments that decide that this ethical behavior is too much, that they don't want to own this stock, they don't want to be associated with it, then you'll really start to see some pressure downwards. Until that happens, Wall Street just cares about the earnings numbers.
Now, for the individual investor, how do you really handicap that? Do you have to do a gut check? Do you look at your own ethical standards and say, I don't want to own a company like this, or they're turning the ship around and I do want to own a company?
Well, that's where there's some really interesting changes. There's a process in investment called environmental, social, and governance, ESG. Mm-hmm. And that's really catching on with investors right now. They're really caring about it, especially millennials, especially women. They care a lot about the ethics of companies that they invest in, and they're expressing that, and they're expressing their values in their portfolios. The more we see that catch on, the more we see that popular in the investment place, the more we'll see stocks that have ethical lapses decline.
Now, if a company, we're talking about Wells Fargo, but there are other companies that have had scandals, if indeed it does start to affect profits, then do you see the institutional investors dump their shares? And that's a danger for the individual investor, is it not? Because if you're holding the stock and the big guys get out, then you're left holding the stock.
Right. And that's where if it does impact profits, and how it can impact profits is not by you and I deciding we're going to pull our retail account from Wells Fargo. That doesn't impact enough. What impacts is when you have something like the state of California saying we're not going to do business with Wells Fargo. When you have large institutions decide that they're not going to do business, that's where you see an impact.
All right, Chris, thank you very much.
Thank you.
Nice to have you here. Chris Cordero with Regent Atlantic. Still ahead, going green, the new push to plug in America's long-haul trucks. The U.S. Postal Service lost more than $2 billion in the most recent quarter. The reasons are familiar ones. There's more competition from the private sector, and the rise of technology has enabled consumers to send less via snail mail. The Postmaster General wants to be able to hike prices, but right now the Postal Service cannot raise stamp prices of traditional mail beyond the rate of inflation. Today, the Postmaster called that cap fundamentally unsuited. The television industry gets a lot of money from advertisers, and Facebook wants some of that. So today, it unveiled a new home for original videos. Julia Borston has more on Facebook's aggressive push for ad dollars.
Facebook wants to make sure its users never need to click away, even when they want to watch a video. Facebook's launching a Watch tab featuring original video, offering recommendations based on users' interests and what their friends are talking about. Facebook's looking for a piece of the $72 billion that will be spent on U.S. TV ads this year.
You look at what Facebook's doing with Watch, all the eyeballs YouTube's already getting, and that's where the advertising dollars are going, because that's where the viewership is.
Facebook's looking to feature content that will drive social chatter, launching with content partners including A&E, Major League Baseball, and Hearst, among others, with shows ranging from a video mashup daily show from video blogger Nas to a cooking show from Tastemade and a National Geographic science show. Facebook's latest push into content puts it into more direct competition with Snap Inc. here behind me. Snapchat has been adding a range of exclusive shows to its Discover platform with partners across the traditional media space, from Time Warner to NBC News to Vice. Facebook and Snap are going up against the largest of the video giants, YouTube, which has been ramping up its investment in original content, not just for its ad-supported videos, but also its YouTube Red and YouTube TV subscription services. It's a crowded space, with Netflix doubling down on original content to draw subscribers, and even Apple just this week launching its second video show, Carpool Karaoke.
I mean, ultimately, you want to have the best content, right? And that's why Netflix has to continue to double down and why it continues to spend more and more. If you're not driving those incremental eyeballs, you're not going to get the advertising dollars. This has always been one of the questions for Apple, of course, right? It has those credit cards on file, but it hasn't figured out a way to tap in to that from an original content standpoint.
Original content is seen by all these players, both ad and subscription driven, as the key way to differentiate their services, to draw new users and keep them hooked. Facebook's Watch tab will start rolling out to U.S. users starting today. For Nightly Business Report, I'm Julia Borston in Venice, California.
And Snap's user growth fails to impress. That's where we begin tonight's Market Focus. The social media company best known for its disappearing message app didn't add as many users in the latest quarter as analysts were hoping for. Earnings and revenue also came up short. Shares were volatile in after-hours trading, but they ended the regular day up more than 1.5% to $13.77. NBC Universal has an investment in Snap. NBC Universal is the parent company of CNBC, which produces this program. In its first earnings report as a public company, Blue Apron reported stronger than expected revenue, but a wider loss. While the loss was disappointing, what drove the stock lower was Blue Apron's weak outlook. The meal kit delivery company said unexpected costs related to a new facility would cause losses to grow, and the shares plunged more than 17% to $5.14. The entertainment promoter Live Nation said an increase in concert ticket sales helped revenue rise above expectations, and profit was also ahead of street targets. Those results sent shares higher by more than 5% to $39.61. The generic drug maker Fargo lifted its full-year earnings outlook after reporting quarterly results that topped estimates. Fargo said strong demand for new products helped it offset losses from falling prices that have negatively impacted other pharma companies. Fargo's shares took off, rising almost 16% to $76.84. And after reporting a surprise loss and disappointing sales, the infrastructure services provider Chicago Bridge and Iron said it would suspend its dividend. The company said it's taking action to improve its financial position. The shares were crushed. They fell 26% to $11.97. The race to build electric vehicles will soon involve large trucks, including semis, hauling goods around the country. Tesla is working on an electric semi, and by the end of this year, a Chinese-backed firm will roll out a short-haul commercial work van that you might see driving around cities. Phil LeBeau has more now on the push to plug in America's trucks.
It looks like any other commercial work van, but this truck by a company called Change is all electric and coming to America later this year.
If you stand on a city street in any urban market, any product or people that are moving are being moved in medium-duty trucks. And the existing product with the diesel it creates the noise and pollution that just is really having an impact. And we saw the opportunity in Change to do a ground-up design EV that really would transform that space.
The market for medium-duty trucks, like those used by delivery companies, is substantial. More than 7 million are on the road in the U.S. Most get relatively poor mileage. But Change says its truck will get the equivalent of 50 miles per gallon. The company is backed by millions of dollars from investors, including some from China. Over the last 4 years, the amount of money pouring into electric vehicle companies has exploded, and it's expected to top $2.7 billion this year. Some of that money is funding companies like ChargePoint, which is building recharging stations, or to startups developing electric vehicles. Many are based in California, but looking to change how the world gets around.
As you start to disrupt a marketplace, I think investors see that, and it's happening right now in California for sure.
The surge of investments in electric cars and trucks is also happening in China, and for good reason. China is already the world's largest market when it comes to all vehicles, but it's also #1 when it comes to those that are electric models. Phil LeBeau, Nightly Business Report, Chicago.
Coming up, a new kind of experiment is flying high.
I'm Morgan Brennan in New Mexico. Holloman Air Force Base is home to the 49th Wing, and it's where the vast majority of pilots that fly remotely piloted aircraft, like this recently retired Predator, are trained. But something else is afoot here right now as well, and that's something that could help transform the way military equipment is acquired. That story's coming up on Nightly Business Report.
Consumer Reports is pulling its recommendation on 4 Microsoft laptops. This after one of its surveys found that users were complaining about problems with those devices. Based on the results of the survey, the magazine predicted that 1/4 of Microsoft's laptops and tablets would have reliability problems in the first 2 years of ownership. The Air Force needs new fighter jets, but they're expensive. So it's doing something unusual that could give smaller contractors a chance to build a cheaper plane. Morgan Brennan reports from Holloman Air Force Base in New Mexico.
In the middle of the New Mexican desert, fighter pilots have been conducting tests in a new kind of experiment.
We took a problem that was out there that we saw, or an area that we thought we wanted to experiment, and we engaged industry, and we took the step forward with the support of our leadership to see if we could do things in a different way. So it is unusual and charting new grounds.
The Air Force is testing light attack aircraft built by 3 contractor teams, Sierra Nevada and Embraer, Air Tractor, which partnered with L3, and Textron, which has 2 different planes on site. Just as the Pentagon is undergoing a massive acquisition restructuring, Air Force officials here say this exercise allows them to test aircraft already available and do so without having to decide whether to dedicate huge sums to a new program. It marks a big potential shift in how the service could buy future equipment. Air Force Secretary Heather Wilson, who's been at the job less than 3 months, says the goal is to make it easier for more companies to do business with the government.
We're not going to spend a whole lot of time and a bunch of years to come up with specific requirements. We're going to say, all right, let's see what people have, and let's test it. And then let's learn from that and then see where we go.
The so-called OAX experiment could result in an inexpensive aircraft designed to carry out certain missions against ISIS and other insurgents that don't have access to high-performance jets.
Let's go over the top.
If this goes well, it could cut the cost and time it takes to get a new aircraft into operation, and do so as geopolitical tensions with North Korea and others continue to flare.
We are stretched very thin. We have asked to increase the end strength for the United States Air Force, but we are also putting money into immediate readiness and then medium and long-term modernization so that we're ready.
But new ways of doing business may also mean more spending by companies up front, including for OAX.
We think there's a number of opportunities out there, both U.S. and international, and it's a great opportunity to showcase the aircraft and fit exactly what the Air Force is looking for.
All 3 teams say the opportunities outweigh the cost, especially since foreign allies have been tracking the tests. But since the Air Force hasn't released a formal request for proposal, there's no guarantee any of this will result in an official U.S. acquisition program, or that today's participants won't face more competition if so. Some critics even argue the Air Force is wasting resources on an outdated idea. But for Secretary Wilson, there's nothing but upside.
If we can innovate faster than the adversary at lower cost, then no matter what happens, we have a better chance of prevailing against an adversary.
For Nightly Business Report, I'm Morgan Brennan at Holloman Air Force Base in New Mexico.
And that is Nightly Business Report for tonight. I'm Sue Herrera. We want to remind you that this is the time of year your public television station seeks your support, and we thank you for that support. We'll see you tomorrow.